Good day traders, it's Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 8th until the 12th of August. Now looking at the highlights for this past week, of course we're still well within the Q2 earnings season of the US. On the stocks front we had Disney reporting its figures over the course of past week, and on the Forex front we had the key CPI or inflation report from the US again, which also showed a decrease in inflation overall. For now, the disclaimer, as always, please note that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategy. Any information that relates to past performance is not indicative of future results. So, looking at stocks, as we mentioned during the intro, we had Disney reporting its figures over the course of the week. Of course, it was one of the most active weeks yet with regards to the number of companies who were releasing their figures, as we had more than 5,000 stocks reporting their earnings figures over the course of the week. This is something that we also mentioned in last week's Outlook. So again, yeah, it's obviously a good idea to stay tuned for both the lookbacks and the outlooks, as obviously we cover different sorts of pieces on each webinar. So yeah, back onto Disney. Disney actually had a pretty stellar earnings report because it was pretty straightforward as well, in the sense that it beat both of the revenue as well as the EPS estimates. Now the revenue estimate showed a surprise beat by 2.43%, whereas the EPS estimate showed a surprise beat of 12%. Now the report was released during the after-hours session of the 10th of August, therefore the impact was seen with the open on the very next day. And if I switch this on the daily time frame, you're pretty much gonna be able to see that. So by not even telling you which candlestick it is, I'm pretty sure you can guess that it was around about here that it was the day after the earnings report was released. And you can also see the huge gap up that prices made, as the day before we had prices closing at around about 112, and on the day after we can see that we opened all the way up to 121, which was more or less like a $10 increase from one day to the other. Of course, prices did drop slightly over the course of that day after the report, but we can see that on Friday, prices still started pushing back up towards the high that was made on the day after the report was released. Now, like I said, even though Disney had a pretty strong earnings report, that wasn't even, I would say, the headline surrounding its report, because what we got a few moments later is something that, in my opinion, is even more significant, and it's the fact that Disney actually has now surpassed Netflix, which is one of its biggest, if not the biggest competitor, and they surpassed it in terms of total paid streaming subscribers. So yeah, and with those news, it was pretty much, I would say, a very positive day for Disney investors, and specifically for people who chose to trade the earnings release of Disney. Now, moving on to Forex. As mentioned during the intro, the main fundamental event to look out for was the CPI/inflation report from the US. Now, the figure was released on Wednesday, with the forecast figure for inflation being at 8.7%, but the actual figure came in at 8.5%, so it was positive by 0.2%. Now, even though it was only 0.2% better than the forecast figure, it's worth comparing it to the figure that was previously released, because the previous figure showed inflation sitting at above 9%. To be more specific, it was sitting at 9.1%, if you remember when we had the last release. So it was a pretty much strong report in that sense, because it was obviously decreased by 0.6%. Now, in a different kind of market environment, where we're not in a hyperinflation environment, I would say, a decrease in inflation could be seen as something negative. But obviously, in this case, because obviously we're in hyperinflationary environments, not just in the US, but overall across the world, like in the EU as well, for example, then obviously this kind of decrease is like sort of a nice breather for the markets in general. And we can pretty much also see the impact that the report had, and we're going to specifically be looking at two major currency pairs and two of the most liquid ones, which is the euro dollar and the pound dollar as well. For this particular one, I'm actually going to switch down to the 30-minute time frame, because obviously it's going to be much easier to see when the report was released. And again, just keeping it here, I mean, you can pause the video if you want, but giving you like 30 seconds, I'm pretty sure you can start already guessing which candlestick where we had the release of the inflation figures. And zooming in, it was pretty much this one right here. So this is when we had the figure being released. Again, you can see it's 1:30, which was the time. It's obviously, again, UK time, which is the time that the figure was released. And as we said, because obviously this is seen as a negative in a way for the dollar, because obviously it's inflation dropping. We saw the euro dollar and both the pound dollar skyrocketing. And if we're being specific about the figures, the euro dollar rose by more than 1% or 104 pips in a span of just 30 minutes, because you can see it's pretty much the whole move was made within this candlestick. And if I switch on to the pound dollar, yeah, you can pretty much see some a similar behavior. So again, we're still on the 30-minute, and you can even see a gap on the chart here, which indicates how strong that price movement was. Now comparing it to the euro dollar, the pound dollar rose by 1.25% or 150 pips. And again, reiterating, this was in a span of 30 minutes. We can see price held strongly even afterwards as well. Like, prices kept on rising, but towards the end of the day, we pretty much came back down towards the close of the candlestick when the report was released. But yeah, I mean, overall, it was a pretty good day as well for the major currency pairs, because obviously, if we look across the board, so let's have a look at the Australian dollar, US dollar as well. We're still staying on the 30-minute. You can pretty much see similar behavior as to the other two. If we look at the New Zealand dollar, US dollar, we're likely going to see more or less the same picture. You can see it here. And then the US dollar Swiss franc is another one. This one should have dropped, and we can see the gap down right here. And then the last one is the US dollar Japanese yen. And again, we should see a drop, which is what we can see right here. So yeah, you can see across the board, every single major currency strengthened against the US dollar. And this obviously didn't just impact currencies. This impacted a wide range of markets. So if we're moving on to commodities, which is obviously the next type of asset class we're going to be covering, and if we look at oil prices first as an example, so we can see that this was pretty much the candlestick where the figure was released. And obviously, with the dollar dropping significantly, obviously we see a rise in the dollar-denominated commodities. So in this case, oil rose during the release of the report. And with regards to the figures themselves, oil prices rose on the week itself also by more than 7% or $6.50. And the reason is because obviously, I wouldn't say it's just the inflation report that fueled the drop in the US dollar. It's obviously a combination of reasons, but obviously that one was probably one of the most important ones. So if I switch onto trading, just to have a look at the chart of the dollar index, just removing the moving averages, and you can see we're on the weekly time frame. We can see the drop for this week. So as one would expect, with the inverse relationship with the dollar-denominated commodities, it's no wonder why, if I switch this onto the weekly time frame, we're going to be able to see that overall on the week, oil prices, yep, you can see that they were higher. And the same situation happened more or less onto gold, where the inverse correlation is even stronger. We're keeping it on the weekly time frame. You can see that gold prices rose, and this was actually the 4th consecutive week in the green for gold. And if we're going to cover the time of the release of the event, we can pretty much see it with this candlestick right here, which again dollar was dropping, so obviously with the inverse relationship between gold and the dollar, we saw it rising during that time. And yeah, there you have it. As far as the look back and review for this week, quite a number of events impacting the markets aside from the earnings report. Well, obviously, like we said, we had the inflation reports. We're gonna get some more of those next week as well. So as always, I would say stay tuned for the outlook as well, as we're gonna be covering the events for next week as well. So yeah, I hope you found the video useful, and I'll catch you all in the next one. Until then, trade safe.